fellow team members, I'm mighty glad to be here today, and I hope that you are too, as we have another opportunity to learn, help others, and create a peace of mind experience for our customers. Today, we're going to talk about the conversation of how life insurance works. And you can use this with a customer when you're explaining how a policy works. So, let's take a look. Here's a policy, $250,000 of death benefit that a customer could apply for. If they pass away, that $250,000 gets paid out to the beneficiary. You would select your beneficiary, whoever you want. It could be more than one person. It could be 50-50, it can be 70-30, however you'd like your beneficiary to be. If you pass away, your beneficiary gets that money and gets that money tax-free. And our death claims are processed quite quickly, so that's a real benefit. When someone applies for life insurance, underwriters get that application electronically, and they can do several things. One, they can issue the policy right away. Depends on the amount of coverage and the age of the person. Or they'll order a health history interview, which involves a phone call and a 15-minute conversation about a person's health. We outsource that to a different company to do those calls for us. And that can also be done online now as well. They can fill out that information online. Might also order medical records. If a person's got some medical history and they want to explore that a little bit, they might order medical records from doctors and medical providers. And they may also order a portable medical exam. That could also be part of the underwriting process, which is a simple person that comes out to the house, a certified person who checks their height, their weight, asks them some health questions, draws blood, sends that in, and that's all free to the customer. And we can let them know this is like getting a free mini health exam because we will send them the results of that. We ask them to do it in the morning. That's the best time to do it after you've fasted all night and your blood pressure is nice and low. So that's a tip for that. There are two types of life insurance, basically. There's permanent life insurance and term life insurance. Term life insurance, we have 10, 20, and 30-year terms. And these policies are very affordable. And I lock my rate in for 10, 20, or 30 years. So if I'm a 30-year-old and I buy $500,000 for $50 a month, I'm going to only pay $50 a month all the way till I'm 60 years old. So I really locked in. And that works quite well if I've got kids and a mortgage, and for a period of time in my life I need a lot of life insurance that I may not need as much later. Term insurance fills that void quite nicely. But let's say I'm that 30-year-old with children and a mortgage and a lot of obligations. I buy a 20-year term policy, and 20 years later I'm 50, my kids are grown up, and I don't need as much life insurance, but I still need some. But at age 50 now, that 20-year term is gone. And so that's where permanent life insurance comes in. Certainly I can wait till I'm 50 to buy permanent life insurance. But having some permanent life insurance, I believe, for everyone is a good thing to have. And those policies typically build value. So there's value in those, that money that can be used. And they're permanent, meaning they'll last all the way till I'm 100 years old. Whereas the term insurance doesn't build value. So if you think of it like owning versus renting. Renting is like term insurance. I rent, I pay my money, I have a place to live. Owning your home is more like permanent insurance, where I'm putting money in, I'm paying my mortgage, and I'm going to own it at some point in time. So that's the difference between term and permanent life insurance. And these are the things that I wanted to share with you today. I encourage you to use part or all of this. Make it your own. Let experience be your teacher. And good luck, and have more fun creating more peace.